Welcome to ForexTV.com. It's Thursday, March 13th. I'm Remy Hookey for your New York Forex Market Buzz. In another volatile day, the U.S. dollar index has fallen to yet another record low. Dollar-yen fell to its lowest since October of 1995, briefly touching 99 and 77 yen. In afternoon trade as of 1 p.m. Eastern Time, euro-dollar is at 1.5595, while sterling-dollar is trading at 2.0326. Meanwhile, dollar-yen is around 163. Earlier this morning, the Commerce Department reported that U.S. retail sales fell 0.6% in February, following a 0.4% gain in the previous month. U.S. equities have eased back from morning lows after the S&P fell as much as 2%. This afternoon, I'm joined by Ashraf Laidi, Chief Forex Strategist at CMC Markets. Good afternoon, Ashraf.
Good afternoon, Remy. How are you?
Good, thank you. Thank you for joining us this afternoon.
Pleasure.
Well, Ashraf, dollar-yen has fallen through 100 yen, while crude oil and gold have hit record highs. The collapse of Carlyle Capital has done little to calm market jitters, despite the good news from S&P that the end of write-downs may be near. But it's obvious that with the 100 yen level being breached, we're seeing a significant reflection of broader financial turmoil. So with investors running from the carry trade, I'd like to get your take on where you stand in terms of dollar-yen.
This is not only a case of the carry trade, which is helping the yen across the board, but it is very much a case of the U.S. dollar. The U.S. dollar could not have a worse year, a worse month, or a worse time, or a worse day than it had today. You mentioned the good news about S&P. That's not called good news. That is called a potential hopeful statement by a credit rating agency that is saying we think we have reached probably the peak or the end of the downgrade. That's not called good news. What is news is really the bad news from a company, a huge, a giant private equity company, private equity fund, Carlyle Capital, whose subsidiary, whose parent company is Carlyle Group, who has very, very highly connected people, and they have failed to get the creditors to seize the assets of Carlyle. Such a big news that hit the market around 1 a.m. New York time, our time, was a big story for the unwinding of the carry trade. So that helped the yen across the board, that helped the Swiss franc across the board, and it brought down the Aussie, it brought down the New Zealand dollar against all these low-yielding currencies. But then, because we saw, but it's also a very economic story as far as the U.S. dollar is concerned. So that really slammed the dollar across the board. And yes, it was fast the way we came down. Why did we come down so fast in dollar yen? Because look what happened. What happened yesterday on Wednesday? The stock market ended lower one day after the record high, the record-breaking injection of liquidity, $236 billion from the Fed and the rest of the world injecting liquidity that was so helpful in putting the Dow by 400 points up until only the next day to end lower. That shows that the credit markets are dysfunctional, confidence is bad, and you know what? When you inject liquidity by even $500 billion, you're not going to be able to use that to reduce the unemployment rate. You're not going to be able to get the company to be able to spend when you increase liquidity. You have to slash interest rates, you have to cut interest rates, but even that may have a slower time. So right now, with this almost a quadruple parity, $1,000 gold, $100 yen, 110 oil, almost one-to-one parity in dollar Swiss. And when the GCC nations from the Gulf are saying we may be scratching our head and maybe thinking about depegging our currencies from only the U.S. dollar to other currencies, it leaves very little choice, Remy, to sell the dollar. So basically, to get down here to business, dollar yen is facing a trendline resistance at 100.9, or let's say 101. It's going to be very hard to break above 101 in dollar yen. So really, people are looking to retest 150, 130, and then we're going to go to 99.70. Euro dollar, yes, it was a big move towards 56.30, 56 to 26. We're coming back down here. The interim support, Remy, is actually much lower. The interim support in the euro dollar is around 53.20 and 52. So if we drop, let's say, another 200 pips in the euro, there's going to be a big snapback upwards. People have to be careful, though, in selling the US dollar against the currencies such as the Aussie. which even though got propped by good job numbers above 94.30 right now, people have to be careful because we may see a retreat in the stock market or further retreat, and that will weigh on that currency. But right now, really the game to play is really buy the Swiss and buy the yen, especially at this time right now where these currencies are undergoing a slight retreat.
Okay, Ashraf, next week we do have the FOMC meeting coming up, as well as the rate announcement and the most recent Fed move in coordination with the other global central banks, as you mentioned, did not actually address the problems in the U.S. economy. So if we have yet to see an end to the consequences of the economic slowdown, we have yet to see a recovery. So where do you see the Fed going next week, and what does this mean for the long-term dollar forecast?
We think that the Fed, we think that they're going to, we were thinking that they were going to do 50, but you know what, it's becoming very hard to predict this because after they did that huge injection of liquidity, people were saying, okay, there's not going to be an intermediate rate cut and they're likely going to do 50. But now with the situation is becoming so bad in the market, they may have to do 75. It doesn't matter what I think, it matters to tell people what would happen if this happened and this happened. And I think the listeners should know that if we get a 75 basis point cut, that may be very good for the stock market, but it really hit the dollar across the board. If we get only a 50 basis point cut, and let's say we get another sell-off tomorrow and we get another sell-off on Monday, then I think that because Monday there's industrial production, I believe, next week. I mean, on Monday, that's going to be very important, and that's released by the Fed. If we get only 50 basis points, Remy, that will be just a short-term positive for the U.S. dollar, just a short-term positive. But but people are waiting to once they touched 156.20 in the euro, once they touched 99.80 in the dollar yen, they're going to want to retest that, and there is nothing in the market that is going to stop them from retesting these lows in the U.S. dollar when the situation is getting worse and there is no signs by the Bank of Japan or the ECB to have any meaningful intervention.
Okay, Ashraf, last but not least, now that we've gotten your take for the major pairs, let's get your take on what trades you'll be watching. For the traders out there in our viewing audience, what are your top picks at this moment in time?
Yeah, right now, I'm looking at a short Canadian yen is not a bad thing to look at. The Canadian yen has retraced back towards 102.75 from 195. I think that's probably a nice play here. To still buy the yen. You buy the yen against the Canadian. You buy the yen against the U.S. dollar at just below 101. You sell dollar yen, we could also be looking probably at, if you want to buy the dollar against something, maybe there is a chance maybe you could look into that against the New Zealand dollar. But really the major trades, to short Canadian yen, to short dollar yen, and maybe also be long euro Canada, which is right now at 153.20. It is a full 100 point below the high, and I think that's maybe something that, considering 153.20 towards 154.50. But these are really the major plays that I am looking at right now.
Okay, Ashraf, thank you very much for your insight and analysis this afternoon.
Thank you, Remy.
This has been your Forex Market Buzz with Ashraf Laidi, Chief Forex Strategist at CMC Markets. I'm Remy Hokie. Join us later this afternoon for a PM Exchange right here on ForexTV.com.